So hey, we're here to talk about the future of securities servicing, and so specifically talking about custody and tokenization. So I'm Graeme Moore. I'm the co-founder and head of tokenization at Polymesh, and here on the panel with me today, we have Anush Ervshatian, the Chief Risk Officer at Zodia Custody, Jurgen Hoffower, the Global Head of Strategic Partnerships at Taurus, Wayne Hughes, Head of Digital Assets at BNP Paribas, and Nicolas Tissier de Malaret. Nicolas, they didn't put your last R on here, but I know it's Tissier de Malaret. Lead product manager at Ripple. So to get into things, I think first, just wanted to pose an open question to the panel. What's going to change about security servicing with tokenization? Why are we doing this at all? What's the point? Is it cost savings? Is it speed? What's really the point? Anybody who wants to take that first off?
Yeah, okay, happy. let me try and make a start. Couple of things for out there. It started off with looking at just business cases, how to make more money. So obviously you look at it, you need to kind of like somehow position it. I think that shifted also towards looking at the cost-saving aspect of it. So what does tokenization help us? It's not so much about tokenize and you create liquidity. I think we moved on from that. That just tokenization doesn't mean there's more liquidity in the market. So what's the cost-saving aspects? And that cost-saving aspects, and sometimes, I'm thinking back of my banking days, the last thing you kind of think of is what are the back office functions that come with all of that. It's not so much as like, do we need new investors and so on? No, but what's the back end of it? And there we think about, the asset servicing aspect, reporting services, corporate actions. And what can we do to mitigate risks there? So one instance, if you miss corporate actions, if you miss dividend payments, well, there's an impact on it. It might not necessarily be seen in the first place, but it will be. So tokenization, at least the more institutions look into it, the more the industry looks into it, the more educated everybody gets, is definitely a means of automate processes, use smart contract functionalities for exactly that, to then take out the complexity and streamline it as well.
Anybody, any other thoughts? Wayne, I think I saw you about to chime in.
Sure. So I think, as a very traditional custodian, everything around efficiency is something very attractive to us when we talk about tokenization, just reinforcing your point. And definitely agree that I think one of the most interesting areas there is corporate actions. Today, we often have very long processing chains, multi-party processing chains, where, as you highlighted, each entity has to take the right action at the right time, and it really lends itself to delays, errors, which obviously generates both an operational cost, but also, an economic risk. So that for us is, definitely one area of concentration. But I think equally important is the possibility that tokenization brings to manage new assets, or let's say manage assets in a different way. Thinking about things like fractional ownership of real estate, that's something that also for us is very attractive, maybe a new type of asset that we can manage, kind of in some way making the pie, and the available assets larger.
Nicolas, any thoughts? No, none for you. Awesome. Anush, anything?
Yeah, I mean, in the traditional securities world, we're talking about T+1, right? So if you look at tokenization and the potential that has within the traditional finance sector, it's honestly the limits there are essentially limitless. What I think we do need to see, though, in order to get to that position is a significant improvement in maturity in terms of the overall infrastructure that institutions need in order to get involved and get more embedded within it.
And what are some of those improvements in infrastructure that you think?
Yeah, so I think there's some steps that the industry is making initially. It's things like segregation of assets held at exchanges. What kind of exchanges are we talking about that are involved in this? Are we talking about clearinghouses being involved as well? Do they have the right maturity in terms of being able to handle tokenized securities in itself? Right now, I think we need to see a meeting point between the traditional finance sector and perhaps more digitally native businesses, and to try and work together towards getting to that stage where the infrastructure is there to bring in the institutions at a mainstream level.
Yeah, absolutely. Nicholas, I did want to ask you something. Where are you seeing some significant traction today in your organization as it comes to security servicing, custody, tokenization?
Thanks. So I think we've been in the payment business for quite some time at Ripple, and we wanted to expand in our footprint. And in 2023, we acquired Metaco to enter the crypto custody space. And we obviously see a lot of institutional players entering the field. And these institutional players are looking for robust, compliant, and secure solutions to manage their digital assets. So that's one of the things. The second one would be compliance. Right now, we are putting a lot of focus at Ripple Custody with, with the Financial Action Task Force, with MICA. We're putting some efforts on regulatory reporting, on transaction screening, and also on travel rule compliance. So these are two dimensions where we see a lot of traction in the recent.
Great. So Wayne, similar to you, right? BNP, large organization. Where are you seeing a lot of traction right now? Where are people getting excited about?
So I have to say that things are going slowly in the tokenization world, but I think definitely recently we've seen some trends that we believe are starting to point toward some possibility of certain use cases scaling up over the near term. One of the things that we see very positive is a lot more engagement from our client base. Even going back 1 year, everyone was very happy to talk about tokenization. But when you got to the end of the conversation and asked what's the next steps, it was, contact us 6 months from now and we'll continue to discuss, no? And we really are seeing that to start to change, that instead of just talking, people want to start doing. And here I'm talking about doing something live. One of the sparks we saw was the ECB wholesale central bank digital currency trials and experiments. It really seemed to grab the attention of a lot of our client base and motivate them to want to start that journey. I think the other big thing we're seeing right now is a lot more willingness to collaborate between the different counterparts. Now, in each initiative, we see our own counterparts out there willing to participate with us. And we really believe that that's one of the keys to get this to scale up. And then maybe just lastly, we start to see a real sense of urgency. I've heard a number of people say it on panels recently that, maybe our window of opportunity to really get this to scale maybe is starting to close. Management at the end of the day has a lot of, let's call them distractions like AI, et cetera, fighting for the same budget. So I think that's also helped us as an industry, or helped us as in the banking industry, to be a little bit more pragmatic, focus on potentially some use cases with the potential for a shorter return on investment.
Yeah, I mean, a lot of us have been working on this for 5, 6, 7 years, and back in the day, I would say 2018 was the year of tokenization, and then I would say, okay, 2019 is the year of tokenization, okay, 2020. But now things have really changed in a big way in the last 6 months. Jurgen, where are you guys seeing some traction?
Yeah, no, I just wanted to add to that because things are moving slowly, but I think they're moving steady into the right direction. So you can't compare it with crypto native because there's like a lot of projects out there. A lot of projects also die after a year or after 6 months because, yeah, for various reasons. So what we have seen with our clients is really a focus on looking at their businesses and say, okay, what's important to our business, right? And how can tokenization help us with that? Also trying to steer away from trying to tokenize everything that's out there, but actually, okay, well, again, for our businesses, we have seen money market funds, we have seen tokenization of deposits. How does that fit in with collateral management? and mobility, internal mobility of assets. How does that add value to the underlying client? And that's, again, I think it's an evolution and in the thinking and really understanding the core business of the banking side, plus with what the technology can do. So there's the shift. I think there's also a shift, like Taurus, we provide infrastructure for custody and tokenization. That's kind of the base layer out there. But then now banks and financial institutions go to the next step and say it's not so much about tokenization. What do we need to do to create liquidity? And there's many players in here as well that are already focused in this space, that now getting a lot of more traction as well because it's on the agenda. And then the other part is, and some of the partnerships that we announced as well is how do you feed the right data onto the blockchain and connect off-chain with on-chain? Because again, it's important. And then you look at the whole ecosystem, and I feel things are coming together.
Anoush, are you seeing similar things?
Absolutely. Jurgen, you've taken the words right out my mouth. I was just about to say the key thing with tokenization as we think about it is honestly the feasibility of the use cases that it supports. Collateral management obviously being one of them. Payments, we've seen stable coins take a rise. It seems like there's a lot of institutions as well that are issuing their own stable coins in recent times. I think the real inherent value lies in the use case behind it rather than just tokenizing for the sake of tokenizing. And I think the really integral part at the end of the day that digital asset custodians provide is essentially, like Jurgen mentioned, that foundational base layer. Custody is the plumbing for which all of these subsequent use cases, whether it be payments, collateral, lending, borrowing, etc., trading, custody is essentially the foundation behind it all that you need.
And so switching gears a bit, I want to talk a bit about self-custody. And if any of us could ever see that as taking shape in a world where people are institutional investors, and maybe it's not exactly self-custody, people still want to segregate those functions out between different various entities, but maybe the asset manager has one of 3 keys, or they have M of N, and there's some kind of scheme where people want to actually be able to control and manage their own assets. Has anybody thought anything about self-custody, or how do we think that's going to take shape, Nicholas?
So I think from a philosophical point of view, self-custody has seduced a lot of early adopters and tech-savvy people in the first place. We also see the emergence of mainstream, easy-to-use self-custody platforms, and I think this trend is probably likely to continue. On top of that, self-custody is probably something that individuals are looking into when they have concerns about their privacy. They don't want their financial information to be held by third parties, and that's probably the type of individuals that are going for self-custody. That being said, managing securely your keys can be challenging for individuals and also daunting. So that's where I think, if I take an analogy, you can stack some money under your mattress for a while, but when things are getting serious, you want to take your funds to the bank, and that's where institutional custody comes into play. You want to have like a robust, secure, compliant solution with governance around it, and that's pretty much what we bring with Ripple Custody.
Yep. Anybody disagree, or everyone agree? I'd be surprised if the custodians, if the institutional custodians...
The two can coexist. That's my final answer.
Okay, yeah. Wayne, can the two coexist? Do you think we'll see self-custody in the institutional asset space in the future, or it's going to be custodians highly regulated?
I mean, I would tend to agree that there's different cases and different needs that might open themselves up to different models, no? Obviously, it won't be surprising that we're not a big fan of self-custody and being a large custodian. Definitely we do believe that we definitely believe this technology can bring a lot of benefits. We definitely think that us as custodians have to evolve our operating model to continue to add value to our clients, and potentially the value we add tomorrow won't be exactly like today. But we do believe that having a custodian in the middle still adds value, probably could go through a number of examples, but I think one of the clear ones is everything around risk, and you mentioned it. Even if there's a certain attraction to self-custody, at the end of the day, there is a risk, and I think that's clear out in the market if we looked at the crypto world, and it could be applicable to the tokenization world. And us as custodians, that's part of our business today, to take on that risk, take on the risk of the asset safety on behalf of our clients. And I do believe going forward that will continue to add value, apart from the other added value services that we provide around asset servicing, et cetera, et cetera.
Jurgen, thoughts?
Yeah, no, I mean, look, at one side I could say obviously it would be great if everybody does self-custody and we can have the infrastructure and provide it to everyone. But there is, the one thinking, and then there's the real world, which I agree with you, right? So custodians have been there for hundreds of years. It's about risk management, especially when it comes to institutional clients, right? I'm not talking so much about retail, by the way. There's a complete different thinking here. But for institutional clients, they want, buy side wants to rely on their traditional custodians. They have done that in one way or the other over many years. They don't really want to shift. It's not their core business. They want to focus on what's their core business and then kind of like outsource the rest. And I think that's probably the way to go. I mean, again, we already changing a lot with blockchain technology. We don't have to change everything.
Yeah, exactly. Anush, anything?
Likewise, I do think the two can coexist. However, for the majority of the cases, when we're speaking about institutional investors, it's really important to categorize what type exactly, which part of the segment are we referring to, in which case, obviously, we've mentioned already, there may even be regulatory requirements that are in place that prevent that from happening. Thinking about as well Basel's requirements on crypto asset exposures, thinking about SAB 121 in the US as well. Those are some of the key things that may restrict certain institutions from being involved in self-custody. Beyond that, we've mentioned on the panel already, just in terms of the operational know-how and experience. So this is where it's really, I would say, it's really integral, again, that the more crypto-native companies partner together with the likes of the traditional financial institutions, which many of us, including Zodia Custody, have done as well to try and build up that know-how as well.
And so, switching gears a bit, biggest potential in the next 5 to 10 years on the securities servicing side? Where is that holy grail that's still coming? Where do we see that big innovation? Anush, do you want to go first?
It's quite hard to predict the next 2 years, let alone 5 to 10 years. But I'll try and hazard a guess, and I'll say I am really, really excited to see better integration throughout the ecosystem. I feel like we've spoken about quite a lot of maturity in terms of infrastructure, but it still is very fragmented. We're talking only now about segregation and being able to have assets held off exchange with custodians whilst crypto asset trading is taking place on exchange. So that is literally the baby steps that the industry is taking before maturing to a much higher and larger level that is, quite honestly, fit for institutions. So I'm really keen to see better integration throughout different market participants, between the infrastructures as well. I'm keen to see better integration between, let's say, cryptocurrencies and more tokenized versions of crypto assets, the likes of stable coins, the likes of digital securities. How do those two things coexist? Jurgen mentioned the on-chain world and the off-chain world. I don't think the industry is good enough yet in terms of its own requirements and standards in terms of reporting what that is. So I'm really looking forward to that.
Yeah, we hear that a lot where, we'll talk to a large bank and they'll say they're still not comfortable with USDC or USDT. And so they can't do a securities transaction with a tokenized asset against those currencies. They still want cash in a bank account somewhere, but how exactly does the cash affect a transaction on chain? And so still a lot of questions around that. Jurgen, biggest innovation you're excited to see in the next 5 to 10 years?
So from an innovation point of view, I think we don't want to rock the boat too much. I think there's been a lot of innovation.
What's the spicy innovation that you're excited about?
Well, I think a good next step is that that actually there's less talk about the actual infrastructure, because if you think about it, any innovation that happens, anything that makes it more seamless, you don't talk about it, right? So whether you order something on Amazon, whether you use Spotify, you talk about what we're doing, right? So it's about, okay, you issue an instrument, financial instrument. whatever happens in the background, it does not really matter. And I think once we come to this point, I think we have achieved something, which means we changed quite a lot in the financial world. That's what I would say would be a really great achievement. Not innovation, but it comes through innovation.
Right. Wayne, biggest innovation?
Yeah, I think on our side, I mean, there's a number of points. I definitely agree. One of the real exciting things will be at the point where we stop talking about blockchain and start to really, and stop talking about the technology and start demonstrating the real value. Unfortunately, I think we're still a ways off. But apart from that, everything around, as just an example, unlocking additional types of assets for collateral, we see as something very exciting and something that we think has potential to scale up quicker maybe than some other areas. That could be the example right now on the market about tokenizing money market funds. And again, as I mentioned before, I think everything around fractional ownership is another area, whether that's, tokenization of real estate, tokenization of gold. We do believe that that's another very interesting area where, again, there's a value way past just automation, which is interesting, but really something that's, creating something new and increasing the size of the assets out there.
Okay, Nicholas, big innovation.
I guess my answer will go in line with my co-speakers. I would say the first one would be tokenization of real-world assets. So we see it already today, but I think it's getting more and more mature. We will have, tokenization of real-world assets will bring liquidity to some markets that have been illiquid so far. So real estate is a use case. We also have intellectual property, art, watches, it could be a lot of different things. And that will help democratize access to these new types of assets class. That would be the first one. And the second one word would be interoperability. We have different chains, L1, L2s, ZK rollup, optimistic rollups, and I think having a way to seamlessly transfer liquidity between all of these ecosystems will be a key thing.
Great. And so 5 minutes left. Everybody's heard about the $16 trillion in tokenized assets and the other hundreds of trillions and whatever is going to be here by 2030. Anybody want to make a guess? What's the amount of tokenized assets on chain by 2026? Anybody want to make a guess? And it's very important that you get it right. It's not. Anybody? Any guesses? Are we at 1 trillion? Where is it?
By 2030, I think.
Sure, 2030.
By 2030, I think
easier to be wrong for that one.
10% of global GDP will be tokenized by 2030.
Really? 10% of global GDP by 2030? Love it. Nicholas, great. Wayne?
So I won't venture to say a number, but our perspective right now is that it'll probably be a relatively small percent of the total size of capital markets. We do believe that this is going to be a long journey and that there's going to be quite a few years here where at the end traditional and digital assets will have to coexist, and actually believe that that's one of the big challenges right now, to help the issuers, help the investors to manage that transition.
Jurgen, $50 trillion.
I don't know. It could be, but as many things in the industry, sometimes it's really hard to put a timeline and numbers on it because it's just a moving target. If you compare it, if you think about what from an asset management perspective, and that's now traditional side with, let's say, high net worth individuals or private clients, the thought is about 10% of the AUC that they actually hold in this case, crypto currencies. So if I relate that one into institutional, I think the 10% number is the one that I've seen that sticks the most. Now, whether that's 2026 or 2036, I don't know. But again, as I said in the outset, we're getting there. But I stopped making any predictions here, so I just don't know.
Yeah, smart. Not as fun, but very smart. Anush?
Yeah, this is when you really wish for a crystal ball to answer this question, to know the answers to the winning lottery tickets as well. But quite honestly, we've seen already, just with respect to the use cases of stable coins, which again, there's a very fine gray area, I would say. I would almost argue that those should be included in some of these statistics already, right? We've seen the uptake of those in terms of payments. We've seen the uptake and the flow of funds into traditional money market funds as well. We've seen the likes of BlackRock launch Biddle. We've seen the likes of Franklin Templeton launch their Benji equivalent as well. So the institutions are taking the first steps towards it. There's plenty more there. Again, I share the same kind of approach that in order to get to the stage where we're talking about tokenized real-world assets as a mainstream, the infrastructure needs to step up and it needs to get on par with what we see in the traditional finance ecosystem as well. So we're a ways off, but I definitely think, like you said, every year we are looking back and saying, is this the year of tokenization? We're far closer than we were 5 years ago.
Agreed. So 1 minute left. Could everyone give the crowd something that they should Google when they go home, whether it's about your company or something that's exciting tokenization-wise, a good book that you recently read, anything? Anush, what should people Google? Maybe something about the company, anything you want.
Yeah, I think the next thing that you should really Google is just trying to understand use cases of tokenization. So collateral management has been a big one, and it's trying to understand what exactly is appropriate in terms of collateral. Biddle, we've seen being used as a key use case. We're seeing the likes of even Bitcoin, ETH being used as a use case too. So I would really say take that away. Think about crypto as collateral. Think about what does that mean in terms of the ratings of the underlying, in terms of the structure of the underlying. How is that being stored? Yeah, some good bedtime reading.
Cool. Jurgen, what should people Google?
I think I don't know what the outcome is if you Google that, but I think you should Google how to move out from POC to production, but I think it's I mean in a serious way, because that's how we see that we can evolve, because it's really, I think the time is now to shift. And again, if you haven't found the use case yet, I mean engage with from institutional side with every stakeholder, and you will see, I mean, there's just more and more coming. So that's what I said.
Wayne, what should people Google?
Yeah, just really fast, just to name another use case. So tokenization of carbon credits. It's another one that we think is quite exciting.
Great. Nicholas, final word.
Yeah, so I think you just mentioned tokenization. I think for any use case, such as tokenization, you need to have a strong platform to secure your digital assets in the first place, and institutional custody is definitely what you're looking for. We've been working for quite some years with the big financial institutions on the market, such as HSBC, Zodia Custody, and we also have some very nice use cases with Société Générale Forge in France, with DZ Bank, DK Bank in Germany, and we see this institutional adoption really happening right now, and we're really excited about it. So I would say.
Awesome. Thanks, everybody. Round of applause for our amazing panelists. Thank you very much.